Welcome back to Wealthstone, where we break down the latest financial news to help you make informed decisions. I'm Greg Shaw, and today we're looking at what's been a busy October, including a surprise rate cut from the Bank of Canada and a few thoughts on the U.S. election, which could have big impact on the markets. Let's jump in. Starting with the big news at home. This month, the Bank of Canada made a decision to cut interest rates by 50 basis points. For context, that's a half a percentage, bringing rates down after a period of steady hikes aimed at controlling inflation. One major reason behind this cut was Canada's recent inflation numbers. In September, inflation dropped to 1.6%, which is actually below the bank's target of 2%. With inflation slowing faster than expected, the bank decided to cut rates by 50 basis points instead of 25 to encourage economic growth. By making borrowing more affordable, they hope to help both business and consumers keep spending and investing in Canada's economy. This rate cut is a sign that the Bank of Canada is shifting its focus slightly from solely controlling inflation to ensuring that the economy doesn't lose momentum. It's a delicate balance, and they want to support growth without risking another round of rising prices. So, what does this mean for you and me? Well, if you have a variable rate mortgage, you might start seeing slightly lower payments, which could offer some relief. The same goes for other variable rate loans or lines of credit. For homeowners, this may also make it easier to qualify for new mortgages or renewals at a more affordable rate. On the flip side, savers are not going to be too thrilled. Lower interest rates typically means less return on high-interest savings accounts and GICs. So if you're relying on these for income or short-term growth, it might be time to consider alternative investments, though it's important to keep in mind your own risk tolerance. But remember, while this rate cut can bring short-term relief, it's still important to keep a long-term plan in place. Lower rates today can mean more inflation risk tomorrow, so budgeting carefully and planning ahead is key. Now, let's cross the border and talk about the U.S. election, which is another major factor driving market volatility this October. While, depending on when you're watching this, the election results may already be in, the outcomes could still impact markets for months to come. The stakes are high, whether it's tax policy, trade agreements, or government spending. Changes to the U.S. economic direction tend to have ripple effects worldwide, especially here in Canada. Investors are watching closely because the result could influence sectors like energy, healthcare, and technology differently depending on the winning party's priorities. No matter what the outcome, Canadian businesses and investors could see some new opportunities as well as potential challenges in cross-border trade. So, if you're an investor, consider how these policies in areas like tariffs, energy, and even AI development could impact Canadian holdings. I personally feel bullish that companies will continue to innovate, though, regardless of who's sitting in the Oval Office. To wrap it up, here are a few key takeaways from this month. Number 1, expect lower borrowing costs in Canada. The Bank of Canada's rate cut makes it cheaper to borrow, which could spur growth but might mean lower returns on safe saving options. Number 2, market volatility will likely persist. Between the U.S. election and economic uncertainty, the markets could see continued up and downs. And number 3, opportunities in certain sectors. Lower rates and potential U.S. policy changes could create opportunities, especially in sectors that are sensitive to interest rates, like real estate, utilities, and tech. For investors, the key is still to stay diversified and keep an eye on those developments as they unfold. As we move into November, these changes are going to impact both the Canadian and U.S. market in big ways. So stay tuned, keep informed, and don't hesitate to reach out if you have any questions about how these shifts could affect your financial plans. Thank you so much for watching. Don't forget to like, subscribe, and hit the notification bell to stay updated on Wealthstone. Drop any questions or thoughts in the comments. I'd love to hear how you're navigating these changes. See you next time.